Let's take a look at Disney shares. Disney shares taking some losses today, down a little over 1%, along with other media and entertainment companies, after President Trump suggested tariffs on films produced internationally. This coming just ahead of Disney's earnings on May 7th. I want to bring in Doug Creutz. He is TD Cowen's managing director covering media and entertainment. Doug, great to speak with you. I do want to start on these proposed tariffs. How are you thinking about modeling out the potential impact of these tariffs on some of these media companies, including Disney?
Yeah, I mean, until something actually happens, the tariff policy seems to change by the hour. So it's been thrown out there. Whether it actually happens or not is another question. The companies do go outside the U.S. to do a lot of film production, and if there really were tariffs, it would be something for them to consider. They could always move back into the U.S. I think if Trump wants to go down that road, though, then you do risk of having other countries tax U.S. films coming into their markets, which is something I think Hollywood really wouldn't want. So, as of now, again, this got thrown out there. It's not a policy yet, and we'll see how it develops.
How much more expensive, as we're kind of looking across the expenses and what's already known by analysts and investors to be the kind of baseline expense profile for Disney in the media entertainment part of their businesses, as well as across the industry, what's already expected versus how much more expensive it could be if they were to need to produce films in the U.S. versus where they currently do?
Well, first of all, you wouldn't need to produce them in the U.S. You could still produce them outside the U.S. and eat the tariff, right? If it's a 10% tariff on a $200 million film, that's $20 million. That still might be cheaper than doing it in the U.S. A lot of it is driven by incentives that are given by regions to, basically they underwrite some of the cost of film production in order to bring the production there. There's lots of ways that any tariff might be overcome by more of that. So, like I say, I think at this point it's a little bit useless to speculate over what it could be. I would say in general, though, Disney's a huge company. Like if their films get a bit more expensive to produce, it's not going to have that much of an impact on the bottom line.
Got it. Okay, so Doug, talk to me about what will be impacting the bottom line, especially as we head into that key earnings print coming up on Wednesday. I know parks are of particular focus. What are you most interested in learning?
Yeah, so I think parks is really important. I think March quarter was probably okay. Comcast Universal is going to be opening up the Epic Park, imminently. Disney has talked about the fact that they think it could be a little bit of a headwind in the near term. I think in the longer run, they're happy to have a more robust parks division, a more robust parks sort of footprint overall in Orlando. They think it will drive more visitation, which is probably true. But, for the upcoming summer, it could be a bit of a headwind. So that's something that they're going to have to contend with. On the film side, they did have a tough March quarter. They had two films, Captain America and Snow White. Captain America didn't do particularly well, and Snow White did particularly not well. They just released Thunderbolts over the weekend. It's doing fine. It'll make money. It's not going to be a big earner like some of the other Marvel films, but it's doing okay. So I don't, on net, I think the film side's probably a little bit of a negative for them. We'll see how streaming grew in the quarter. They did have Daredevil, which I think was pretty well received. We'll see if that drove any new subscriptions. But overall, I'd say the year is going okay, and there's definitely some concerns about what's ahead with the Epic opening, and then just in general the potential for some macro disruption as some of the impacts from the tariffs, the lack of shipping to the U.S. potentially hits the economy in the next 5, 6, 7 weeks.
How is Disney's entertainment bundle, that direct-to-consumer business, how is that bundle holding up against the rest of the industry from your analysis?
I mean, it's holding up fine. It's not growing a ton. They have been raising price to get it to profitability, which when you're raising price, it's a little bit tougher to grow subs. But it's hanging in there, just fine. They're clearly going to be a long-term player. It's always the question of, okay, like you did it, but how profitable is it going to be, right? Can you get to 20% EBITDA margins? Can you get higher than that? And in the meantime, what's happening to the linear business? They've got the ESPN flagship app will be launching this fall. I think that's a really critical moment for them because they need it to do well. And additionally, when you put ESPN flagship as a DTC app, it'll be interesting to see if that accelerates cord cutting at all, because one of the key channels that keeps people in the bundle is ESPN to get sports. If they're able to get that outside the bundle, does that accelerate cord cutting even more? That's again, sort of a question that we won't know the answer till we get later in the year.
Doug, thanks so much for taking the time here with us today. Can't wait to see the results.
Yep, thank you.